2023 is here and it's gonna be a wild year. Cost of living is increasing, but our wages aren't keeping up. Inflation hasn't gotten under control. Feds are continually raising their rates. We're on a brink of recession or we're in a recession, depending on how you look at it. We're gonna give you our top 2023 predictions for the Boise Treasure Valley real estate market based off data that we're seeing. And stay till the end where you may want to see the prediction that might prevent you or get you in to the real estate market in 2023. Prediction number one, interest rates will hold 6% or higher until the middle of or end of 2023. See, last year we predicted that the interest rates were gonna hit at 8%, but by the end of the year, we missed it by 0.5%. If we look at the Fed minutes from December's meeting, they are continuing to warn investors and consumers that if lowering their rate hikes from 75 basis points to 50 basis points creates a rally in the stock market or creates the consumers get off the sidelines and start buying things, that they're gonna have to be more aggressive in their rate hikes. On top of that, according to this Wall Street Journal, 17 out of 19 officials plan to raise their interest rates above 5% in 2023 and hold it through 2024. Now, they could just be stressing this to scare consumers from purchasing things or stopping the investors from creating a market rally. But if they hold the rates, they raise it to above 5% and hold it there through 2024, then our interest rates will be above 6.5%, maybe even to 7.5%, and we might see an 8% interest rate. Second prediction, construction of residential and multifamily both will slow down even more than they have in 2022. Now, we saw in 2022 that builders stopped building at foundation. Some developers stopped mid-development. The economy was too shaky. We're gonna see even more of a slowdown in 2023, and here is why. Builders are still sitting on their inventory from 2022. And the new inventory that they started in 22, they're gonna be finishing in 2023. If they continually are not able to move that inventory, then they have no other choice but then to stop building new homes. We're also, I believe, gonna see builders pivot from building spec homes to to-be-built homes. So what does that mean? A spec home is they choose the colors, they choose the appliances, they choose the cabinets, and then they're gonna pivot into, hey, we will allow you to choose what carpet you're putting in, what flooring you're putting in, what color the house is gonna be. I mean, just a couple weeks ago, we had a friend who's a developer and builder, and on one of his communities, he said, hey, we're gonna change our stance from just building spec homes to now you can bring a client to our community and we'll allow you to pick out some of the selections. On top of that, residential developments have slowed down coming to the end of 2022, but commercial and multifamily are still going strong. Keep in mind, back in 2006, 2007, multifamily took a year to follow the residential trend. So by the end of 2023, I believe multifamily is going to follow the rest of the housing market. And vacancies are rising and rents are dropping, which will force some of these apartment building sales to stop. For instance, in a Wall Street Journal article, it said that multifamily purchases dropped 74% from November of 2022 compared to November of 2021. So to coincide with that last one, another prediction that we have is that rents are going to continue to drop and vacancies will continue to rise. On a previous video we did, we reached out to a handful of property management companies that we work with, and they were telling us that their multifamily or their apartment complexes were getting 30-day notices and that they were having more vacancies sitting in the apartments. The reason being is with the single family rental market increasing because, well, if you've been following our channel, we talked about this. Sellers can't sell their homes and they're turning and trying to get into rentals so that they're not having to fork over money and pay for a vacant house. So they flipped them because they haven't been able to sell them. So with that increase of rental property, and we're going to see an even bigger rental increase in property, I believe, because of our vacant inventory that's not being sold, that's going to create more people. Instead of renting an apartment complex, they're going to move into a single family home and rent that instead if they can get it for the same price. And our inventory for rentals are going to continue to climb. The other reason why I think inventory is going to rise, let's look at this chart put together by CoStar. CoStar is the commercial MLS. They are saying in 2023 that they are projecting that there's going to be 500,000 multifamily units coming to the market that are going to get finished and be put on the market. So we already see a rise, at least here in the Boise market, we're already seeing a rise in vacancies. We're already seeing a rise in rentals. We're seeing an increase in rental properties being up for rent, and we're seeing rental prices drop. And I believe we're going to continue to see that going on into 2023. We are not monetizing this channel because we value your time, but maybe we've earned a like and subscription from you. So hit those buttons And let's jump in to number 4. Boise unemployment rate will rise. The tech sector has had the fastest layoffs since the pandemic, and remote workers made up a big chunk of that great migration and the property value increase in Idaho. Let's just look at this migration graph from United Van Lines. 43% of the people that moved here had an income of $150,000 or more. Only 21% of those people who moved here because of a job, which shows that we have a lot of remote workers and retirees. But before I go any further, I know what some of you guys are thinking.
Josh, you can't use United Van Lines.
Yes, that is true. This is just a small sample of the overall picture that we're seeing. Now, Amazon, they came out and they said that they're laying off 18,000 people. Micron is laying off 10% of their workforce. HP is laying off 6,000 people. And Meta is laying off 13% of their workforce. Why do I bring these companies up? Because these companies are a big employer of the Boise Treasure Valley market. And if construction continues to slow down like we are predicting, then construction workers are going to get laid off as well. So in whole, we're going to possibly see unemployment rise in 2023. Prediction number 5, the Great Migration is going to cool down. Let's just look at the data and see how that's changing. According to Atlas, in 2022, 51% of people moved here and 49% of people moved out. Last time we saw these numbers was in 2012. U-Haul saw 54% of the people getting a one-way truck here and 49.6% leaving the state of Idaho in 2022. And United Van Lines saw 54.9% of people inbound and 45.1% outbound of Idaho. That's a 6% swing from 2021 and a 15% swing from 2022. This is the last and potentially the biggest prediction: increase in foreclosures. Biggest argument we hear against foreclosures is people bought and locked in at low interest rates. Although there is truth behind that, I had to see if that is true for our market here in the Boise area. I went through 1,200 active listings for resale. So we pulled out the new construction and just looked at resale. Right now, about 10% of those 1,200 listings, if they sold today at that list price and paid 7% in closing costs to title companies, real estate agents, etc., they would be selling for a loss compared to when they bought it. And even more of the 1,200 homes are close to selling for a loss right now. See, the increase of interest rates has caused the affordability factor to go away. Just look at this chart by long-term trends. The ratio breakdown is how many years of a household income will cover the average cost of a house. The average for the nation stayed around 5, and last time it hit 7 was 2005 to 2007. Right now, we're at 7.78 and 7.5 nationwide. And the mass foreclosures hitting the market from the 2007 recession didn't hit really until 2009, 2010, 2011. If all these predictions come to pass, we will see foreclosures increase even more. Because remember, foreclosures is the last domino to drop. The first domino is interest rates and affordability. Then it goes to the inventory not selling, construction slowing, and layoffs coming. And when layoffs happen, it makes it harder for people to make their housing payments, which leads to more foreclosures. These are just predictions. It doesn't mean they're going to come to pass, but we're going to follow the data to see if they come to pass or if we need to pivot from our predictions.